Hello everyone, welcome back to the channel. André Cardoso here, sharing some insights with you. I hope you had a nice weekend to rest and to prepare the week ahead. Let's start with the Dixie. I have a couple of charts to share with you. Not all of them. I also want to invite you to subscribe my newsletter on Substack. You can subscribe and get that newsletter every week in your inbox. And of course, you have also premium access to my content on Substack. So everything that I publish there related to the financial markets, my opinions and my technical patterns, my forecasts, everything, you have access to all of that in one single place with the option to receive that content in your mailbox also. So I invite you to subscribe the newsletter, and without losing more time, let's go further and discuss the technical levels for the Dixie. We discussed last week the range between 101.83, actually between 101.92 and $100.51. That was the range for the Dixie. In fact, we have a new fractal resistance adjusted to the recent highs, $101.83. The Dixie, as we can see, now threatening major support level, $100.60. It's the most recent fractal support level. We are now fighting those levels. As we anticipated last week, the possibility for the Dixie to unfold into a kind of a triangle consolidation, moving inside, sideways and inside this range, and we are now at the bottom of the range. So I admit a possibility for the Dixie to break lower, and as I called your attention last week, we have also the bullish crab pattern projected at $99.81 above the previous support from July 2023. The pound also being pushed higher, of course. The intraday support and resistance levels already vanish. We have already that range. We abandoned already that tiny range between 131.58, 131.12 as support. Pay attention to trendline resistance now approaching from the highs, not only for the cable. We have other patterns that may start to emerge, of course, and that's the reason why I want you to subscribe my newsletter, where I share all those possibilities. Also for the euro versus the dollar, exactly the fiber also approaching a fractal resistance level, actually also approaching the resistance trend line, and the same happening for the Aussie, which is already breaking the channel resistance and the daily fractal resistance level. A few Fibonacci levels, just to let me try to pick this. Nailing the golden Fibonacci retracement level. The Kiwi also fighting the daily fractal resistance level. We have also the monthly fractal resistance at 62.21. Pay attention to a move towards that same monthly fractal resistance also for the Kiwi. Points to 62.24, 62.21. That's the golden Fibonacci resistance. And golden Fibonacci 61.8% Fibonacci retracement level, of course. Aussie, the dollar versus the CHF, not the Aussie. Dollar versus the Swiss franc, also threatening the violation of the trendline support. I admit new lower lows for the pair, despite the signs of divergence already in place. I admit a possibility to retest this monthly fractal support, 83.32 for the Swiss franc. The Norwegian krone, big pattern, big bearish shark pattern, completed at 10.87, pushing the price lower. And actually I was not expecting so deep retracement. I expected at least a 50% Fibonacci level to offer some pressure and some support. It looks like a you know, a full retracement almost. Let's see if the market keeps trading lower, but we are already, let me also push the 78 and the 88.6% Fibonacci levels, so we have also those levels to consider. Basically the daily fractal support remains in 10.54. I admit a retest of these levels. Again, nice bearish shark pattern for the Norwegian krone, big shark completed last week. We have also the dollar versus the Japanese yen. Doesn't not actually, it's not reacting to the bullish alt pattern that we projected last week. 113% Fibonacci extension level. Let me put that level right there. So as I said multiple times, once the bat pattern fails you, just grab it. So if the bat pattern fails you, in this case it was an alt bat pattern already at 113% Fibonacci extension level, a very shy move to the upside, a very shy bounce. But if this pattern fails as a reversal behavior, always search for the shark pattern. So at this point we should target 136.92 since the price breaks below the 113% Fibonacci extension level, showing some symptoms of lack of strength. So basically the continuation of a bearish momentum for the dollar versus the Japanese yen, which is basically synced with our weekly projections, which points to 128. So basically pay attention to this big move to the downside, which was expected already. Of course, I'm not expecting a direct move towards these levels, and we saw these recently very shy and high bounces for the pair. I will expect at some point the market to bounce again. You know, at some point the market will start to bounce, and one of the possibilities is exactly the golden Fibonacci extension below. So if the price approaches these levels again, 136.92, I will admit the price. I will admit a new bounce after the completion of a new crab pattern. In fact, the bullish crab pattern, 136.92. Euro versus the yen, also another example, not reacting according to the bullish bat pattern, 155.45. There's another level that we should take into consideration, of course, and we discussed that right before with the dollar versus the yen. The 113% Fibonacci extension level should always take that level into consideration. 113% Fibonacci level points to 153.06, right below the fractal support. Every time you trade the bullish bat pattern from the 88.6% Fibonacci level, you need to put your stops below this starting point of the pattern, and you always need to take into consideration the 113% Fibonacci extension. So even if you are trying to buy the market from the 88.6, you need to put your stops below this Fibonacci extension, because there is always a risk for the price to extend toward the 113% Fibonacci level and then starting to bounce. Okay, so every time you search for, or you identify the bullish bat pattern and you decide to enter the market at the 88.6, you always need to consider the extension below the starting point of the pattern. Then if the price breaks below these lows, or if the price fails to give sequence, you know, to the bullish alt bat pattern, then you point to the golden Fibonacci level. Then you start to project a deeper move towards the golden Fibonacci level, and that will invalidate those patterns above. Of course, we will expect the market to react later if those prices achieve it. Okay, so but always take that in consideration. Every time you search for the bullish bat pattern, you always need to take into consideration the alternative bullish alt bat pattern also. So that being said, the euro versus the Japanese yen is also threatening the the invalidation of the bullish bat pattern, which may force into new lower lows, and you should also pay attention to this 153 for the euro versus the Japanese yen. You have the
Hi, my name is Blake Morrow, president and co-founder of Forex Analytics. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
You have the euro versus the pound. Also, we continue inside these, inside this consolidation process. A false break of the resistance may guide us into a breakout of the support level. Nice flag pattern unfolding for the euro versus the pound. The bullish bat pattern usually, and we discussed this before, targets the 38% Fibonacci level. I admit that price being achieved inside this range, inside this ascending channel, or inside this bearish flag pattern, if you wish. So pay attention to this slow and steady consolidation inside this channel. Euro versus the Aussie also unfolding into what we may call an ascending channel to the upside, of course, but there's also something that I want to call your attention to, and let me delete this channel, and let me also delete these Fibonacci levels. And if you pay attention to this fractal support level, to this daily fractal support, 164.49, that also acts as a neckline. And that's a neckline for, let's say, a minor or a lower degree edge and shoulders. And we can also try to identify the default projections for that pattern. So I put my 200% Fibonacci extension level 163.02. That's the default projection for the edge and shoulders pattern. So basically we have the reinforcement of this level of support, reinforced already with a new fractal level, so a new fractal support already reinforcing the neckline. So I admit this may act as a edge and shoulders pattern formation. So if the price breaks below this daily fractal support, I admit a move towards the 200% Fibonacci extension level. Even though, pay attention to the channel that I was showing you before. So we're still trading. We may unfold into this, this ascending channel. We are now reinforcing the structure support of this ascending parallel channel. The pound versus the New Zealand also called your attention last week on Twitter to how this pair reacts to the golden Fibonacci retracement levels. Before that, it's not we don't know if the price will keep reacting the same way, but we're still fighting the 61.8% Fibonacci level for the pound versus the New Zealand, eventually unfolding into what we may call into an expanding triangle. We're still trading inside this range between the daily fractal support 2.1184 with resistance at 2.1352. So we're still inside this range. So at this point, we should not try to anticipate a move, before breaking above or before breaking lower. So we have a few elements already in our chart. We have a potential heads and shoulders pattern formation. We still need to wait for the clear violation of the resistance level. That pattern points to actually approaching the 217, basically move towards the 200% Fibonacci extension level. So let's see how the market unfolds this week. We are in a nice position to search for those searching for opportunities to short. We are fighting a nice and strong resistance, reinforced already with a new fractal resistance at 2.1352. That's the most recent fractal resistance level for the pair. So I admit I admit some pressure to the downside, and I admit an expanding triangle to start to unfold, which may force an approach to the previous lows again. Now let's change into the commodities and finish with the Bitcoin. We have silver fighting the 224% Fibonacci extension level. I called your attention last week to the golden Fibonacci extension. As we can see, silver was not actually completely ignored the previous highs in fractal resistance, the weekly fractal resistance, and moved immediately towards the 224% Fibonacci level. So this completes also the bearish shark pattern, so pay attention to potential pullbacks for silver market also after completing that sequence. We have also crude oil, a nice reaction after completing the bullish scrap pattern, $67.24. We called your attention to this completion last week. It may unfold into a bullish reversal price behavior. And let me show you what I'm seeing for crude oil. I'm seeing this as a potential edge and shoulders pattern inverted. We have a new fractal resistance at $70.61, acting as a potential neckline or a barrier of resistance for that pattern. So I admit if the price clearly breaks above these $70.61, will force a move to higher prices for crude oil. We discussed the default projection for this bullish scrap pattern before, the 32% Fibonacci retracement level, $71.27. 71.27 is the default target for that pattern. We have also some updates for the SPX 500, new fractal resistance formed intraday resistance at 56.37. We have a bearish crab pattern also projected for SPX 500. Let me point this pattern to you at the golden Fibonacci level. 56.60, basically the previous daily and weekly fractal resistance level. So this is the 161.8% Fibonacci extension level, which may act as a barrier of resistance, converging with the previous fractal level. So pay attention to these levels also for the SPX 500. We called your attention last week for other possibilities. One of them was the 113% Fibonacci level. We were trading 55.78. We called your attention to that possibility. As you can see, both silver and SPX 500 ignoring those first Fibonacci extension levels as potential pressure levels and moving forward and towards the next ones. In this case, SPX 500 a bit far from those levels, not yet there. Golden Fibonacci extension 56.60 for the SPX 500. You have also Bitcoin also fighting a structure support of this potential ascending channel. So I extended this to the right. As you can see, we are connecting those lows, and as you can also see, we have Bitcoin approaching the lows of this ascending channel for potential structure support. So this is previous daily fractal resistance. As we can see, this is a previous resistance zone for Bitcoin. Let's call it an intraday resistance for Bitcoin. This is also the golden Fibonacci retracement acting as level of pressure to the downside, level of resistance. So pay attention to these levels also for Bitcoin, specifically the range between the intraday resistance at 60k 600 and 58k as support. So this is the range that we have now for Bitcoin. As I said before, if you want to go deeper into those patterns and to start to unfold how the market will you know, how the market will react later, or how the market may react later accordingly to these harmonic patterns or advanced pattern formation. So I invite you to subscribe, and of course you will have you will get access to all these content and much more in your mailbox and in your mobile devices also. So I hope you enjoyed this video, and I will be here tomorrow updating some levels for you again. And stay well, and I hope you have a nice trading week. See you in the next video.